All right. Once again, you're welcome to Tradersearn Academy, beginners live stream. As I said earlier, this stream is what we'll be doing weekly. It's going to be holding once in a week, and today's stream we'll be talking about the outlines. We'll be reviewing the outline of this series. Okay, you can pause a minute to read our trade disclaimer. I'll just read it so that you all can, if you have any questions about it, you can ask it after the class. Then I'll answer it. All trades in this group, that's the website or our signal groups, are given for educational purposes only. Over 95% of traders never win; they actually lose money. Trading is risky, and there are no guarantees that you actually win the trade. If you follow any setups or signals, you do so at your own risk and take full responsibility of your actions. Nothing is to be taken as a financial advice. The information should be construed as investment/trading advice, and it's not meant to be a solicitation or recommendation to buy, sell, or hold any securities, crypto, stocks, or currency pairs mentioned. All content is for entertainment and education only, no financial advice. Past performance is no guarantee of future results. Tradersearn, its employees, or associates are not liable for any trading wins or losses. I think these are straightforward. Should, in case you have any question, you can just pen it down to the end of the stream. Then we'll talk about it. All right. These are the outlines we'll be going through in this series. We'll talk about FOREX terminologies. We'll talk about pips. We'll talk about lot sizes. We'll talk about, we'll talk about lot sizes. We'll talk about some basic calculations that you need to know as a beginner. We'll talk about them. We'll talk about market order. There are different types of them. We'll talk about it. We'll talk about the app that we'll be using to connect. The app that we'll be using to connect, which is our MetaTrader. MetaTrader, we'll talk about it. Then we'll talk about trading view. We'll talk about trade alerts. We'll talk about trades, types of analysis. We'll talk about trade plans and risk management. We'll talk about trading psychology, which is very important. Then we'll prepare our mind about technical analysis. This technical analysis actually is meant for the intermediate live stream, but we'll just introduce you to it. Then these outlines are flexible. You can add to it as we go on with the classes, but these are the basic ones we'll start with first. There's one that I think I should add, but should be under this FOREX terminology, so it's no problem. It's no problem. I'm thinking about adding brokers and types of brokers, all of that. We can incorporate it in FOREX terminologies. And so in this FOREX terminologies module, we'll be talking about what FOREX terminologies are. Then, as we all know, that every profession comes with the terms they use. For example, when doctors are talking, when you see two doctors talking to each other, you as a non-doctor, you may not understand what they are saying at all. It's possible you understand if you have lived, maybe your father or your mother is a doctor, or you have a doctor friend or something. You may be familiarized with some of those terms. It is possible, but if you have no idea about the profession, it is impossible for you to understand what they are saying. So we also have those kind of terminologies in FOREX trading. So we'll be talking about these technologies. There we'll talk about so many of them. We'll talk about the bulls, the bears. We'll talk about the long, the shorts. We'll talk about pips. We'll talk about so many. There are so many of them we'll talk about in detail. We'll talk about them. Then we'll talk about the most popular terms used in FOREX. We'll touch those terms. A lot of them, they are much We'll treat every of them one after the other. We'll treat them one after the other. Then we'll go briefly on why we use terminologies in Forex, which I've already explained a bit earlier. So we'll talk about that. Then when we are done with that, we'll go to the next, which is lot sizes, pips, and common calculations. If not that, this is very, very basic, like it's very important. This will help you very, very well in your risk management, because as our disclaimer has it, trading is very, very risky. You can lose your money if you are just careless for a second. 1 minute carelessness can cost you your entire portfolio, can cost you your entire. So knowing all these calculations, understanding lot sizes, understanding pips, and knowing these common calculations will help you to minimize your risk. As a trader, our major aim as traders is to minimize our losses and maximize our profits. There's no how good you are as a trader. You have the bad days, just as the traditional trading has it. Even those that buy and sell in the traditional market, the physical market that we all know, they always have their bad days, but it's so minimized, so minimized. So that is our aim in this financial market. We try all we can. Somebody is saying he can't hear me. Ahmed Oluwasegun is saying he cannot hear me. Please, is there anybody that can hear me? If you can hear me, please signify before I proceed. If you can hear me, please signify by using the text box or a raise of hand. Anyone? Anyone? Okay, thank you. Somebody already confirmed that. So I'll just proceed. So this basic calculations helps you with your risk management, which is very, very important. It does not matter how much you know about Forex trading. If you don't know how to minimize your risk, how to manage your risk, you will not make any progress, because you might turn your $10 to $1,000 in a month and blow it up the next month. Do you understand? So it is very, very important to know how to risk your management. Sorry, to manage your risk. If you don't know how to do this, then you will just be wasting your time. So we'll talk about pips. Pips simply means percentage in profits. That's what pips means. We'll show you the significance of pips. We'll talk about the significance of pips. Then how to do basic calculations. If you have done your trade plan and you only want to risk, let's say you want to risk $5. So how many pips will give you $5? A lot of things are attached to it. It depends, not just only on normal calculation. It also depends on the asset instrument you are trading. The way you calculate pips for gold is different from the way you calculate pips for it's different from the way you calculate pips for Euro GPY. Don't worry, all these terms, if you don't understand them, no problem. When we do Forex terminologies, you are going to get it, because it's part of the things we'll talk about in the Forex terminologies. That's currency pairs. We'll talk about them and all of that. So do not worry. If there's anything you don't understand, you just pen it down and ask after the classes. If it is something I should answer now, I will answer it. Then if it is something I should leave till we start proper, then I will let you know that. So we'll talk about lot sizes. Lot size actually the amount of your cap equity you are exposing, how much you are taking on each trade. Because basically, what we do as Forex trader is trying to predict what the market will do. We try to predict what the market will do, whether it's going to go up, whether an asset, a currency pair is also an asset. or an instrument will go up or come down. That's what we basically do. So we use different kind of analysis, different kind of tools to know that. You understand? So this lot size is what determines how much you are placing on each prediction you make. So if your prediction is right, your amount of win, the amount of money you win depends on the lot size you use. And on the other hand, if your prediction is wrong, the amount of money you lose depends on this lot size. So we're talking about lot size, type of lot size. We have types. We have mini lot size, we have micro lot size, and we have standard lot size. So we're talking about lot sizes. Then we're talking about how to do basic pips calculation, how to add, how to subtract, how to add, how to do all those maths, so that you know that, okay, this is where I want to put my stop loss. How much of my capital will I lose if my stop loss is hit? You understand? And this is where I'll put my take profits. How much? If you don't know what take profit or stop loss is, don't disturb yourself. It's part of the things we treat in the Forex terminologies. These are the terms we use in Forex trading. So you want to calculate how much you stand to lose if your stop loss you hit, and how much you stand to win if your take profits you hit. So we'll teach you, learn how to do all this calculation. Then how to plan your trade. Basically, I advise people, especially beginners, not to trade more than 1% of their entire portfolio. It is too risky to trade, to risk more than 1% of your entire portfolio. Very, very risky. So you ensure that when you enter each trade, what you are losing is no more than 1%. If the trade should hit your stop loss, it's very, very important. There's no rush. There's no rush. This is a business you plan to do for a very long time. So you shouldn't be rushing. You shouldn't be after turning your $10 to $1,000 in 1 month. No, you should be after being in this business for 1 year, for 5 years, for 10 years, and maintaining the status of a profitable trader. That is what you want to gain. Then after that, we go to market order. After that, we go to market orders. So in these market orders, in these market orders, just like you go this market order, what it means is that the kind of order you want to place. For example, let me give for instance, you go to a shopping mall and you want to buy a product. You may decide that, okay, this product, I want to buy it now, right? I want to buy it now and pay now. You understand? And you can decide that, okay, I don't have the enough money now, so I want to pay part and come back later. You understand? That's another order entirely. Then you can decide that, okay, this particular product, I just want to pay money, but I don't want to take it now. Like, I don't want to buy it now as it is now, but I want to book it. Hey, that's another way of saying it. I just want to book that, okay, so date, I'll come and buy so this thing. You understand? So that's how we have it in Forex market. Also, you can decide to just enter the market, open your MetaTrader 4 and buy by clicking buy, clicking sell. And you can decide not to do that. You can decide that, okay, this price is too much for me. I don't want to, like, let's say gold is sold at $2,000 and you are like, $2,000 is too much for me. I don't want to buy at $2,000. Okay, I want to buy if it should drop to $1,800. So the kind of order you use in that case is also a type of order. You understand? Then you can decide that I'm okay with this $2,000. I want to buy it now. You understand? So it's also there. The market entry strategies. We have different types of we have different ways in entry markets. We have different ways. Some people decide that, okay, this is what I'm looking for. I'm looking for this breakout. I'm looking for this retest. So we'll just brief all these things. She understand basically without using technical terms, just using what's it called now? Just using normal market psychology, just normal traditional market psychology. That's what we'll be using for that. That's what we'll be using for that. So we're talking about market entry strategies. We have aggressive entry and we have conservative entry. You may decide to be aggressive in your entry, that, okay, immediately touch this particular line For example, let's say you have you have this price here. Let's say good at 2,000 naira, $2,000 here. You have good at $2,000 here. The market is currently around this place. This is currently around this place. Let's say this place is, let's say this place is let's say this place is 1,960. 960. That's where the price is now. So you want to enter aggressively. Immediately the price rise and touch this 2,000. You just want to enter it directly. She understands. So you can just immediately touch it. You can just place your trade. That's what we call aggressive entry. Then for conservative, you want to see it rise to this point, eat it like this, then come down a bit, retrace. We'll call it retrace when markets make a temporary change in direction, like it was going down, then it changed up a bit. You want to wait for this retrace, then you now enter somewhere. You now enter somewhere here. You can't enter somewhere here. The difference between these entries is that this person is entry with a bigger risk because the market may just decide to just go boom. She understand, and it will be incurring loss. But the market has already slowed down, show a reversal pattern. Definitely there will be a reversal candlestick pattern here. Don't worry, you will know what candlestick pattern is with time. There will be a reversal candlestick pattern. That's number one confirmation. Then this retrace is number two confirmation, because this higher low formed here is a big sign that the market don't just go straight like that. It goes like this, like zigzag, makes high, makes lower high, makes another high, make lower high. That's how it goes. So immediately it changed from making new highs and could not make a new high again. Then it's a first sign that this lower higher low is a first sign that this higher low is a first sign that uptrend is over. So you have extra confirmation from entry. That means you are more conserved than somebody that just enter aggressively. So we're talking about that. Don't worry, you may not understand some of these things as a beginner, but when we start proper, you'll be understanding them. When we start proper, you'll be getting them. I don't want this stream. This stream is not supposed to be long. I don't want this stream to be long. It's just to prepare our minds for what we have for you. All right. Okay, then we'll talk about MetaTrader. So this MetaTrader is an application that was designed by a company called MetaQuotes. It was designed by a company called MetaQuotes. MetaQuotes. And it is the application we'll be using for our trading activities. This is where you'll be doing your buying and the selling. So we'll show you how to use it. We'll show you how to use it very well, how to make maximum use of it. We'll teach you in this module. Then the next one, we'll talk about trading view. Yes, this is where we'll be doing our analysis. Let me give you some hints. As a forex trader, your aim, your goal is to buy an asset at a low price and sell it at an higher price. The assets we'll be buying in forex is currency pair. She understand? You want to buy it high. Sorry, you want to buy it low. You want to buy it low. You want to buy it here. And what? And sell it here. So if you buy it here, let's say this place is 5 and this place is 10. You bought it at 5 and you sold it at 10. You have made a profit of what? Of 5. Then on the other hand, the advantage of forex is that that's not the only way you can make money. You can also make money the other way around. That means you can actually sell high. You can sell high and buy back low. You can sell high and buy back low. I know that one is a little bit technical because how can I sell what I don't have? It is possible. That is what brokers help you to do. She understand. They help you to do that, to buy it, despite that you don't have the assets in your wallet. You can actually sell it high. That means you are selling it at 5, then buying it back at, let's say, 2. So you have made a profit of what? Of 3. So any which way the market goes, whether up or down, you always make money. So your work is, your own job is to make sure you buy it low and sell high, or sell it high and buy back low. She understand. So if you do something contrary to this, then you'll be losing your money. That's where the risk comes in. If you do something contrary to this, that is, if you buy high and sell low, you lose money. Or if you sell low and buy high, you lose money. She understand. So that's your job as a trader. You try to buy high and sell. So before you can know if an asset is high or low, you will need, if an asset is high or low, you will need to use previous data. That is what this trading view is offering to you. They have previous data of almost every asset that is listed on the financial market. So from the previous as data, that's the previous prices, you can know which price people are buying at previously and prices that people are selling at previously. So you'll be able to use that to predict that, okay, at this particular price, people have always been selling there. So definitely this price, if the assets should increase to that point again, there's high probability that people will still sell at that point again. She understand. So you use the previous data to analyze, to do your analysis and predict what the price could probably do in the future. So what the app that help you to do this is what we call TradingView. It's a web app. You can also download it. They also have their application and web. You can use it on web. That means just go. Let me show you what it looks like. Just a moment. Let me show you what it looks like. Let me show you what it looks like. Yeah. Let me show you what it looks like. Yeah, this is exactly what it looks like. This is tradingview.com. I'm using the app browser. Sorry, I trade crypto a lot. Let me bring a fresh chart. Euro USD. So this is Euro USD. Your home will not be looking this way. I've already customized mine. That's why you are seeing it like this. That's why you are seeing it like this. If you just open it, if you just open yours, to not look like this, you not look like this. When we have the class next week, we'll teach you how to use it, how to set it up, what all these things means, and all of that. So if you have a question, just somebody's raising hand. If you have a question, just note it down. We're almost getting to the end of the stream. So you can ask, there will be a section to ask questions. Oh, okay. You have not been seeing my screen. Oh, sorry about that. Sorry about that. Sorry about that. Sorry. I believe you can see my screen now. All right. Yeah, I believe you can see my screen now. Okay, what I said earlier is that this is the app, this is the trading view. You just go to your browser. If you're using a computer, you go to your browser and go to just go to tradingview.com to bring you here. If you are using mobile, you can just download it. If you are using Android, you can download it from your Play Store. And if you are using iPhone, you can download it from your App Store. So this is what it looks like. These are the previous data there are a lot of information in this chart you are seeing. You will not be seeing yours like this. You will not be seeing this black background. You will not be seeing all this green, and where you'll be seeing this green and red. It depends on how the default settings are. I don't know. Then there are other features, because this trading view you are seeing, it has both paid and free this thing. Personally, I'm using the paid version. I pay every month. I'm using pro version. I pay every month. So there are some features I can use that somebody that's using free cannot actually use. But it is very okay as a beginner to just use free. You understand? Then when you start to have the need for using paid version, then you can now upgrade. You can decide to upgrade. You can use the free version as long as you want to. So let's go back to our PDF. Let's go back to our PDF. Yeah, I think we're back to the PDF now. So we are at trading view, right? We are trading view. So we'll talk about, this is the major thing you should know as a trader: trade plans and risk management. I decided to put it in beginners as streams, because it will prepare your mind. This is not a get rich quick scheme. Oh, somebody came to my DM and told me that, hello sir, I'm owing people money, I'm doing this, I needed money urgently, this is why I want to learn how to trade. That is wrong. Please don't bring money that you are owing people into this place. You are going to lose it. That's the truth. Because when you trade with too much expectation, you as a beginner, you trade with too much expectation, you trade with too much pressure, there's high probability that you're going to lose your money. That's just it. Because this market depends majorly, it moves majorly on supply and demand. Basic economics, there's something we call supply and demand. If many people are buying a particular asset, a lot of people are buying it, then the price will begin to increase. When they stop buying it and they start to sell it, the price will be going down. So you are trying to predict what other billion traders, there are billions of traders in the world. So you are trying to predict what other traders are doing. That's what you are. No matter how good your analysis is, it just takes only one person with a huge amount of money to invalidate your portfolio. That is what experience will teach you. You can start trading and be making money, be making money, be making money. The day it will happen, if you are a type of trader that YOLO in, YOLO means you only live once. You just go into trade with the mindset that it is a do or die affair. It is not. If you do it that way, you actually die. That's the truth. And market will continue. So don't ever YOLO in. You must trade your plan before you must plan your trade. Sorry, before you even tick buy or sell. You must know what you want to do, where your stop loss will be, where your take profit will be, why you are taking that trade. Okay, I'm taking this trade because there are resistances here. Many people have been selling in this particular area, and market has not gone past this in the past 3 weeks, in the past 2 months. She understand? Or maybe there are other tools we use. I don't want to be mentioning those tools here. She understands. So you must have a reason. Or maybe, okay, this asset has been selling for more than a month now, and now it has retraced to a 61% Fibonacci level. It has retraced to this also level. You have reasons. Okay, there's a news that came out. There's NFP, non-farm payroll. There is what was it called again? FOMC, all those news, all those statistics. Okay, these are the results, the outcome. It can possibly affect this. You already have your plans, your reason to take. Then you must manage your risk. How much are you taking in per trade? Okay, if this trade I have a $100 account, how much can I lose with this account before I get liquidated? If you trade with 50% of your account, you just have to lose twice. Then your account is gone. Even the best trader in the world can lose 2 times in a row. It's not a bad thing. So if you don't manage your account very well, you will just blow your account and you will tell people that Forex is risky. Sorry, it's a scam. You hate the person that introduced you to the business. You just hate everything about the business, hate yourself. And if the money is small, you can even contemplate suicide. A lot of people commit suicide every day because of financial markets, cryptocurrency. stock, forex, and all of that. But if you have the right risk management strategy, this will not happen. Even though if you lose 2-3 times in a row, you still have something to fight back. You have something to fight another day. We live to fight another day. So that's what we treat. That's what we're teaching in this particular one. Then we go to analysis. We talk about analysis. We have we have technical analysis. We have fundamental analysis and all of that. So we'll be talking about them. Then which one is better? We'll talk about which one is better, because there's always be these controversies that fundamental is the king, for technical is the king. This, that, we'll be seeing which one is better and why in this section. Then we'll go to trading psychology. I've not noted a point I'll be treating here. It's just going to be more of opening your eyes to a lot of things that happens, the kind of mindset you should have before you even start trading, the kind of mindset you should have. You should just don't start trading because you need money. If you start trading because you need money, you will never make the money. That's the truth. Because even if you go to school to learn, what is the easiest course to learn in school? You don't start learning it today and start making money today. Some people spend 4 years learning a particular subject, a particular course. Some spend 8 years, some spend 6 years before. After all those years, they will still have to go for professional course again. After they have spent 5 years learning that course. So it takes a lot of process to learn. So you must be right in your psychology before you start to trade. You should not be after the money alone. You should be after consistency, winning back to back. That's what I mean by consistency. Even though if the money you are making now is not much, just focus on, even though if it is a demo, though it will be difficult for you to stay committed to demo accounts because your money is not on the line. You're not able to test your emotions, yes, but you can just use small money to test your consistency. Okay, then there's another thing I will add to this, which is journaling. I'll add it. We'll talk about it later because I'm already running out of time. I have less than 5 minutes left. So we'll talk about journaling and all of that. So we'll talk about trading psychology. Then we'll talk about technical analysis. That will be all we'll be talking about in this series. It's not all actually, because we can also add to it. So we have 2 minutes left. I would have loved to do a recap. Let me quickly go through it. So these are the things we'll be going through in this series: forex terminologies, pips and lot sizes, basic calculations, and all of that, market order, MetaTrader, trade alert, types of analysis, trade plans, risk management, trading psychology, introduction to technical analysis. So if you have a question, please, you can drop it on the chat box. Yeah, this, please make sure you read this. It's very, very important. This is our disclaimer. Ensure you read it and understand it. If you have any question concerning it, do not hesitate to ask. I believe there is no question. Yeah. So that will be all for today. Okay. If you have experience on trading and all of that, there are videos that was given to you when you joined Tradersearn. That video contains how to use Tradersearn signal and all of that, how to place trades. You can read those videos. They will assist you on how to place trades. So you can use your demo account to place trades using the signals, the Tradersearn signals. Yeah, thank you for watching. We'll be ending the class here for now. See you next week, and tomorrow will be intermediate live stream. So if you are not a newbie, you already have an experience, then you can join us tomorrow the same time, 8 p.m. for intermediate class. Thank you and God bless.